And joining me now is Capstick from Nedbank Private Wealth to give us his take on markets activity. Brendan, thanks so much for your time this afternoon. So following an upbeat finish overnight, we're seeing some choppy trade today. Is this as a result of those trade jitters as the July 9th deadline looms? It did seem last week that, things are going well on that front, but today we are hearing news around the US and Japan deal that doesn't seem like it's going to go through anytime soon.
Yeah, good afternoon. Thanks for having me. 100% right. I think the market is really looking forward to 9 July deadline for tariffs. We've had an unbelievable run locally and international equity markets, all-time highs from the S&P and the Nasdaq yesterday again. So those markets are up strongly on a year-to-date basis, even considering the strong pullback we've seen in April. So extreme volatility out of equities. But to your point, I think what we're seeing currently is some profit-taking and positioning as we see gold higher today, over 2,330 ounces per dollars per fine ounce. So there is a bit of a risk of sentiment. Universally, we probably see that 10% tariff being negotiated. I think also we saw out of the EU, they're willing to come to the party on the 10%, but trying to negotiate 25% on those autos and car parts around 50%. So I think there is still a wash of what these deals will hold and how much extensions do we see post 9 July. So I think the market has had a good run, strong recovery, but I think there is some news flow that the market is waiting for.
Now we are in the first day of the second half of the year. Do you expect the same kind of rhetoric to keep playing into markets? We still do have the tariff risks. There were expectations that the Fed could cut rates in July, that also being pushed back. So perhaps just your insights on what you think will be dominating in the second half of the year.
Yeah, as I mentioned, it's surprising. I think no one would have expected a strong equity market or even a positive equity market after 2 April. So I think the two elements that you need to look for, and from the US side, is the fiscal and the monetary policy elements. As you mentioned, on the fiscal side, we've got Donald Trump's big, beautiful bill and the tax cuts that could be positive for that economy, as well as the Fed being under pressure to cut rates. You see the shorter end in the US also moving lower. We've got the 10-year note in the US around 4.20. So it just seems that there will be a rate cut on the cards. So even saying those two positive elements for the equity markets, probably going to be driving them higher. And also, I think broadly, the AI spend has been driving these large tech companies higher, and those would be the leaders in the market. So I think in the next couple of weeks, still volatility as these deals get hashed out. But I think more positive news actually developing in equity markets and more of a positive stance, surprisingly, as the market prices in some of these tariffs already.
You touched on that big, beautiful bill, as Trump calls it, and we've seen tensions between President Trump and Elon Musk resurface on the back of that. Tesla's share price being affected being affected after Trump threatened to remove subsidies on Musk's companies and cancel contracts for both Tesla and SpaceX. In addition to, of course, disappointing sales, the feud between Trump and Musk really, really weighing on that counter.
Yeah, 100%. It's not long ago that you saw Trump in his corner with Doge, being part of his team, and quite surprisingly the turn of events. Again, I think from a broader US self-driving story, I think Tesla is required to make that story really play out longer term within Uber and Lyft. But I think really surprising how this has turned so quickly. Of course, their sales volumes have been poor outside the US, but very interesting to see how things can turn. And maybe a note on that is that things are dynamic. No one could have called this. So even with tariffs, I think there is a risk still on the table in the next couple of weeks.
All right, let's take a look at what's playing out on the local front. I've been looking at the rand, and it's really been steadily recovering and strengthening. Quite surprised considering, the ongoing tensions we have been seeing within the GNU. Are investors shrugging that off because we have been seeing the dollar weakening as well?
Yeah, good point. I think that the dollar index has been structurally weak. You're looking around 96.5 to that index, and it's probably giving us some artificial positivity or strength in our rand at this point. But even saying that, our bond market has been strong. I mean, our 10-year note, 10-year bond is trading, on a yield basis below 10. So you've seen some buyers in that space and recovery. Yes, there's been some ministers moving around, being dismissed in the last couple of weeks, and I think the DA has come out and said they will remain in GNU. So I think that is positive from a broader market point of view. But let's see what happens in the coming weeks. But I think all in all, our risk sentiment in the local market's been very strong, with PGMs rebounding, and of course the gold price also still quite strong. So we've also got some trade balances out of our local market, and I think locally, our economics are improving.
Talking about local economics, we are seeing some bright spots in the manufacturing sector, with the ABSA PMI ticking higher at 48.5 points, still in contraction territory, but I guess a move in to the right direction.
Yeah, 100%. I mean, I think there's a couple of points to that. You've had the interest rate cuts, this year, as well as possible factors such as tariffs. I mean, maybe local manufacturing coming back, maybe front running on some manufacturing contracts. So that's probably leading into our sentiment as well. That could play a role. But positive to see some of these upper or positive numbers coming through that number.
All right, let's hit pause on the conversation. Before we move on to your stock pick, let's take a moment to touch on what your industry peers find interesting.
So we had, I guess, reasonably robust financial journalists calling a 45 billion pound deal for roughly a 50% stake, and of course in Pence Corp, and of course Reinet owns 49.5. So they will certainly be part of that conversation. Part of the reason we have reiterated this as a buy is that this essentially becomes a new peg in terms of the valuation of that business. Yeah. To give you an idea, the last carrying value, and the nice thing about Reinet is because of the Luxembourg listing, it does report full earnings every 3 months. The carrying value for that stake as of last reading was 3.4 billion. So writing that up to call it the mid-range, or even the bottom of the range, 4 billion for that stake. I mean, given that it seems that these things are in play, and that's been quite a coherent strategy of the private equity players in collecting these pension fund benefits companies.
Yeah, certainly. I've been very impressed with what management's been doing there over the last couple of years, and I think there's still more to come. So I think specifically the platforms business, which is more annuity type business. Think of your a Netstar and your fintech and so forth. I think there's probably strong growth coming from those businesses, and I expect very strong earnings growth, probably in the region of, call it 15%. But I think the key for me is if you look at the cash earnings of this business, it is substantially higher than the accounting earnings. And one of the reasons for that is because of the depreciation policy they use on these actual devices at Netstar. Gotcha. Now, they are going to consider to change that. That is going to change, and I think they're certainly justified to change that. That's going to mean even higher earnings growth and higher ROEs, and I don't think that's reflected in evaluation or in consensus earnings numbers. So I think there's a price to both sides. So as a result, I think you should look to buy it now, and you'll probably get the benefit 6-12 months from now.
So Alex, going with Altron and Quibus picking Reinet, just your analysis on those counters, Brendan?
Yeah, let's start with Reinet. I think very topical, up again strongly yesterday, 11.5% on that news of the possible sale of the Pension Insurance Corporation, and 49.5% of that. But I think, as mentioned, there's various ways of playing this out. There's optionality for management. I mean, they could unwind the whole structure, would be very beneficial for shareholders with possible special dividends. They could possibly sell a segment of it. It still will unlock premium to net asset value. And even if they do nothing, as Kobus mentioned, there is now underpin for that value. So they are decreasing that discount to net asset value. So shareholders are in a good position, and I think we like it as well. So we do hold it for clients. All
right, then let's get your pick. Altron.
I'll just mention Altron briefly.
Okay.
Not something we do cover extensively, but I think it plays in that mid to small cap space. Strong management team. One of the IT and tech like companies that you can buy locally, not a lot out there on the local market. But I think post that Bytes unbundling, the management's been very good. So Netstar and the fintech platforms, very competitive.
All right, let's get into your stock pick. Where are you seeing opportunity at the moment?
Yeah, our pick is Absa Group, locally listed bank. We've got new management on board, corporate revamp on the cards, focusing on REEs and non-interest revenue targets. On that front, also it's trading on the price of book below 1, so it's the cheapest in the index, banking index or the banking space, paying you 9% dividend yield. So a lot of good things, a lot of good valuation that you can consider in that space. With marginally better GDP growth and future interest rate cuts, possibly locally, I think you're getting Absa at a cheap valuation at these levels.
All right, Absa, one to look out for. Brendan, thanks so much for your time and taking us through trade at midday. That was Brendan Capstick from Nedbank Private Wealth.